It's been in the news headlines for a while, people having 50, 60, 70-year mortgages, and I've been saying that's effective amortization, not contract amortization, two very different things. And then Equitable Bank comes along and says, hold my beer, and starts offering actual 40-year mortgages in Canada. We'll be talking about that and a whole bunch of other. This is the weekly news recap here on Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina, and that's my trusted assistant, Matilda. So we're going to get an explanation as to what exactly Equitable Bank is doing here. We're also going to be talking about PST changes in Saskatchewan, how it's going to make affordable housing maybe just a little bit more of a realistic possibility, the new low that hit Toronto for the number of purpose-built rentals, the Bank of Canada's interest rate announcement, and a whole bunch of other awesome topics. But of course, let's start off with another one of my terrible bad dad jokes. The other day, my wife and I took our daughter to the zoo and they only had one animal there, a dog. It was a Shih Tzu. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into this week's news. The first article here is that Toronto rental construction hits a 9-quarter low as legislation to scrap the GST is introduced. This to me is something that's not surprising at all, that we're seeing the number of purpose-built rentals continue to decline. Even with rents increasing, the cost of interest rates is making these projects just simply not financially viable for many builders to go out and build them. Now, not having the GST on purpose rentals is going to help things, but when you have significant fees through land transfer taxes or other various development fees levied by different provincial and municipal governments, that makes it really hard to make these projects viable at 6, 7, 8% interest rates. And those interest rates are going to be higher generally for the developers because they're going through commercial lending, not residential lending, which is typically a little bit cheaper. Now, this has been most pronounced in that 905 area where rents are a little bit lower than more downtown markets that are commanding higher rents. So some of those projects in the downtown markets are able to get off the ground because those rents are higher. We obviously saw that huge project go upside down, the one as it was called, downtown Toronto. Now that one was already on shaky legs long ago, and there was a lot of people that weren't really holding high hopes that that was actually going to get built. Now they're into bankruptcy, but there's already another company that's taking over and they're going to try to continue that project out. But we've seen it, and I've been talking about it for a while now. High interest rates, even with higher rents, is just making projects not viable, and we're seeing fewer and fewer of them being built. And that's why I think, although temporarily we're only talking about interest rates and unaffordability, I think we're going to be talking about unaffordability for a long time, even when interest rates start dropping back down, because we're going to have this lag where not a lot of homes are going to be built, or a smaller number of homes are going to be built, especially purpose-built rentals. And then we've got that issue of a growing population in Canada. At some point here, that disconnect is going to continue to get bigger, and I think we're going to be talking about affordability for a long time in Canada. Next up is an article saying that 35% of Canadians would need to make a significant change in their lifestyle if there was another rate hike. Honestly, I'm a little bit surprised that it's only 35% of people saying that if there's another interest rate hike, they're going to make a significant life change. You know, we've gone from seeing fixed rates as low as about 1.5%, and now we're seeing fixed rates at 6.5-ish%. Payments have gone up not just hundreds of dollars, but in some cases thousands of dollars for some homeowners. So one more interest rate hike is going to continue to put the pressure on them. Now, what you're seeing here is the way people react, because a lot of people thought as soon as interest rates go up that everybody would have to just lose their house, turn the keys back to the bank, and we'd see all these foreclosure sales coming up. And we're just really not seeing that. We haven't seen much in the terms of mortgage delinquency rates increase. It's gone up from 0.15% to 0.16%. We have seen power of sales increase ever so slightly, but even in areas like Toronto, it's still only like 0.7% of all active listings. I mean, this is really small numbers. We have seen, though, delinquency rates for auto loans and credit cards continue to increase quite substantially, because that's what people stop paying first. They're not going to pay for the car. They're not going to pay their credit cards back on time, but they are going to make those mortgage payments for as long as they possibly can. Now, of course, mortgage delinquency are going to go up at some point here. I'd be utterly shocked if we don't see power of sales and foreclosures going up. Right now, that 0.16% mortgage delinquency rate is basically a record low as it ever has been. Even pre-pandemic, it was 0.3%, so double what it is today. And that was already considered historically very low. If you compare even pre-pandemic to the United States, their mortgage delinquency rate was around 3 to 5%, where again, we were 0.3% in Canada. And in the subprime crisis in the United States, when everything went upside down, they saw mortgage delinquency rates on those adjustable teaser rate mortgages at 30%. Again, in Canada, what, 0.16%. There's only about 7,500 mortgages in Canada right now that are delinquent. It's a really small number. Now let's talk about the Bank of Canada's most recent interest rate announcement, where they held interest rates at 5% again. This was basically the worst kept secret in Canada. Essentially, everybody was expecting Bank of Canada to hold interest rates, and that's exactly what they did. I had a poll question, as I do always before these interest rate announcements, asking you guys what you think, and the majority answer was people thought they were going to hold interest rates. The question now becomes, what does the Bank of Canada do in 6 weeks? There's one more interest rate announcement before the end of the year, and whether the Bank of Canada raises interest rates, holds them, drops them, there's a lot of people speculating what the Bank of Canada is going to do. I will always post a poll just before the rate announcements, and you guys can vote on it. You know, let me know in the comments below right now. What do you think? Bank of Canada, are they going to raise interest rates before the end of the year? Or are they going to continue to hold them? There's a lot of things that can play into this. There's a lot of data still to come in before that Bank of Canada next meeting, and they make a decision whether they're going to raise interest rates, keep them the same, or drop them. They did have a hawkish tone, and I expect this to continue. They're saying essentially, look, we're holding for now, but beware, we could raise interest rates. Part of the Bank of Canada's job is to control monetary policy with adjusting interest rates, and another part of it is talking, using their words to control monetary policy. So, you know, they've done this before. They've said, when they did their initial pause, we're pausing for now, but if things start getting worse, we will raise interest rates. And then they did. And that's exactly what they're doing right now, saying if things go the wrong way, we will raise interest rates. One interesting thing that I saw from their report was that they actually expected home prices to drop more and quicker than they did. And so they were a little bit surprised they didn't see as much of a drop off in home prices because of how much they raised interest rates. Next, let's talk about the federal government pausing the carbon tax for those using heating oil to heat their home, and as well as providing heat pumps to low-income houses. This has to be one of the most hurried, slapped-together political announcements I have seen in quite a while. No special signage at all, which is typical of this government. They weren't in a location like Atlantic Canada, where this policy really has the most impact. They were still in Ottawa. It just seemed like they just quickly slapped it together, and even you look at the Prime Minister's itinerary, this wasn't on the itinerary until later in the day. It wasn't on the morning itinerary. So absolutely they threw this together. And let's not beat around the bush. This is entirely a political announcement. This has nothing to do with housing affordability or anything the like, even though as much of the government's gonna want to spin it that way. They're seeing the poll numbers. They're doing poorly in Atlantic Canada, an area that they know they need to do well if they plan to win an election in the future. And the carbon tax on heating oil has become extremely unpopular in the Atlantic provinces. Of course, it's popular in many other places in Canada, but the government doesn't care about those regions. They want Atlantic Canada to continue to vote for them, and that's why this policy was put in place, because at the end of the day, while other places in Canada do use heating oil for their heat sources, predominantly it's natural gas pretty much everywhere in Canada, except for the Atlantic provinces where heating oil is used much more extensively. So really, that's what this is, was just a quick political announcement to hopefully change the fortunes of the political winds in the government, and nothing more than that. Next up, let's talk about the Saskatchewan throne speech, where the provincial government announced the continuation of a PST rebate on new construction and a secondary suite program. So this is something for those that don't live in Saskatchewan, where we had PST that applied on parts of new construction and parts where it didn't apply. It was kind of a confusing system. A number of years ago, the provincial government just said PST applies across the board on new construction. And that, of course, was something that aggravated a lot of people and made housing more expensive. It added, depending what you're looking at for new construction, about 2 to 5% onto the purchase price. And now they're essentially going to do this PST rebate to kind of roll back that policy. I wish they just had scrapped it entirely, or scrap PST entirely altogether on new construction materials, labor, etc. But that's not what they're going to do, at least anytime soon. And when in Saskatchewan, when they have essentially no political opposition at this point, the government isn't really being pushed to do anything like that. The other side of it is this secondary suite program. And again, because this was a throne speech, this is not a budget or an actual policy announcement. Essentially, this is kind of like the plans of what the government looks to do in the next session. They have given really no details on what the secondary suite program will be, but it sounds like it's going to be some sort of grant or incentive program to see more secondary suites, whether it's basement suites or laneway houses, being built in Saskatchewan in an effort to tackle affordability. Once there's more details on any sort of program that actually gets announced, I'll be sure to speak about it. Now let's talk about these 40-year mortgages being offered by Equitable Bank. Now this is really a bait and switch. It's not Equitable Bank that's providing a 40-year mortgage. They're going to advertise it and market it, but they're actually having this mortgage provided by a private third-party lender. So for those that don't know, the standard mortgage is 25 years in Canada for an insured mortgage. That's when you have less than 20% down. If it's an uninsured mortgage, you have more than 20% down, then you can stretch the amortization out to 30 years. That applies to all of your A-type lenders. So anybody from the Bank Act, credit unions, monoline lenders, all of those types of institutions. Now, if you go with a private mortgage, you can get any terms you want. You can do a 100-year mortgage because nobody is regulating those lenders. Now, while they have increased in terms of their market share, the private lenders are still a very, very small percentage of the Canadian mortgage market. Of course, in areas like Toronto and Vancouver, they hold a much larger percentage than areas, say, Saskatchewan and Alberta. So what essentially is going on here is Equitable Bank is going to do the marketing for this mortgage, and they're going to do some of the underwriting, some of the mortgage approval process. But at the end of the day, the mortgage is going to be run through this third-party lender, and it's a 9% interest rate. Again, you could go to any A-type lender today and get somewhere in that 6 range quite easily. This one's a 9% interest rate. So I saw somebody broke it down. If you had a $500,000 mortgage and had to spend all 40 years paying it off at that 9%, which again is unrealistic assumptions, but let's just do it for entertainment's sake, that mortgage would cost you like $1.4 million. So really stretching out over 40 years doesn't help you. You just pay more interest over a longer period of time. Now, whether the government goes and changes amortization rules to extend it, that's entirely possible. I could see a government doing that, especially a government right now that looks to be scrambling to try to find ways to show that they're helping the housing affordability crisis in Canada. So don't be surprised if something like that comes up. But when you read this headline, no, Equitable Bank is not providing you a 40-year mortgage, and you're not going to see it from CIBC or TD unless the federal government changes lending guidelines. So if you are thinking about buying a house in Canada, you're of course going to use Equitable Bank's 40-year mortgage. Please don't do that. Please go to a mortgage professional and get a better mortgage than that Equitable Bank one. It's not a good mortgage. It's going to get a lot of headlines. Just please don't do that. But if you are thinking about buying a house, of course, if you're in Regina, I would love to help you out. Matilda, who's now left, normally sitting there, she'll come along for the showings. But if you're not in Regina and you want to buy a house somewhere else in Canada, don't worry, I can still help you out because I've got a great network of real estate agents across the country that I have vetted, and I can get you set up with that perfect agent in your market. In the description of this video, go check it out. There's a link to my calendar. You can book me in for an appointment. I'll give you a call, learn about what's important to you, and get you paired up with that perfect agent. If you love this week's Any Real Estate News recap, give this video a like, subscribe to Bald Prairie Real Estate if you haven't already, leave me some comments below. I love chatting with you guys in the comment section below, and as always, thank you very much for watching.